best feelings in the world is to be able to deliver home ownership again to someone who has been through what our divorcing clients have been through. How do you become a homeowner again after a divorce? So it is not uncommon for clients who have owned their own home, have enjoyed having their own home, to have to go into kind of the rental market after their divorce before they're in a position to purchase a home again. So you absolutely can. One of the best feelings in the world is to be able to deliver home ownership again to someone who has been through what our divorcing clients have been through, and it can be a great fresh start. But there are definitely things that you'll need to do and be very intentional about if you do want to re-enter the housing market again. So the first thing that I would recommend is that you definitely speak with a lender and someone who's knowledgeable about getting a mortgage after a divorce. So first step would definitely be to speak with a mortgage lender, even though you may not be ready to. But what they can do is they can give you a prescription pad and give you all of the steps that you need to take in order to be able to qualify for a mortgage. A few things that go into mortgage qualifications, very basic. Number one is your income. You've got to prove that you've got a certain amount of income relative to how much your house payment's going to be. And there's longevity with that. So there needs to be, a history on how long you have earned income. A lot of times it's 2 years you need to have been employed in the same industry. You could have job hopped within that 2 years, so long as it's in the same industry. That's kind of a guideline that they have, but you need to make sure that you have proven that you have the ability to earn income. Now, if you're depending on support as payment, there are specific rules that apply there, and you'll definitely want to speak with your lender about how support payments, whether it's child support or whether it is spousal alimony, how those get applied as income after a divorce. They're very specific rules in how the court order was made, as well as how those payments are traced. So you want to speak with a lender with regards to that. And I'll warn you that if your ex is making the house payment, let's say you still live in the marital home until it's sold, but your ex is making the house payment in lieu of support, that may not be able to qualify as income as support, because there's not that clean trail that they have provided you with the support payment, and then you have utilized that to pay your debts. So you want to get with a lender about that. Of course, I'm not a lender, but I do hang around them a lot, and that's one of the concerns that I hear them frequently talk about. So your income, your ability to trace your income, that's big. Number two is your credit. If you haven't seen my video on credit and repairing your credit, you'll definitely want to make sure you watch that. But your credit score is going to be really big with regards to your ability to qualify as a borrower. Another thing is your cash on hand. So you want to make sure that you've got a certain percentage of income or a certain percentage of cash reserves. You need to have your down payment. You'll need to have enough for closing costs. And then you'll also need to have a certain number of house payments that are in the bank. So you might hear them say, like, I need 3 months reserves. So you need to show that you've got, after you've made your house payment or your down payment, after you've paid your closing costs, you'll also need to have remaining in the bank. You'll still need to have a certain amount of reserves. Should you come up with a couple of rough months, then the bank needs to know that you're still going to be able to make those payments. And then you also need to make sure that you look at your divorce judgment and that you coordinate that with your lender. I cannot recommend enough that you get a lender involved, but even before your divorce judgment or your final decree is finalized, because the verbiage, the way that they word things in a court order, can impact whether or not an underwriter is going to approve you. And even if your intent is one way, but it's worded funny or differently, that can definitely make an impact. How much longer you are going to be expecting to receive support for your children is also going to be something that they're going to take into consideration. If you've got kids that are 17 years old, using child support for a 17-year-old, when a bank's smart, they know that that's going to sunset when they turn 18 probably. They're not going to probably apply that. So there's a lot that goes into it. I would highly recommend that you coordinate your lender and even with your lawyer so that you can make sure that your goals in the future are going to be accomplished. I know that this is a lot. You're going through a lot, and having to deal with all of this at the same time is sometimes just too much. But if you can, definitely an ounce of prevention is worth a pound of cure in these circumstances. And your lender is going to be able to best guide you on what you need to do in order to prepare yourself to buy a home again, how much money you're going to need to earn to buy in an area that you're looking to buy, and what your FICO score needs to be, what your debt to income ratios need to be, and certainly what that court order needs to say. So hope this helps. Be sure to like, subscribe, and comment below if you have any other questions. Good luck.